Okay, so the concept which we are going to see today is adjustment of capital. So revaluation concepts உங்களுக்கு doubt இல்ல it's completely clear for you, right? Okay. So this concept, that is adjustment of capital, is the last concept under the topic of change in PSR. Okay. அதில் ரெண்டு டைப் இருக்குது. ஒரு டைப் நான் எடுத்திருக்கேன். ஒரு டைப் இன்னும் இருக்கு இல்லையா, பேலன்ஸு கரண்ட் அக்கௌண்ட் மூலிமா அட்ஜஸ்ட் பண்ணுறதுன்ட்டு. I taught you one problem, right? There is one more problem where we need to pass on to the current account. Okay, you can see here that there is two entries. Okay, if you can just see here, okay, they have mentioned that for adjusting shortage of capital, you will have bank account debited or concerned partner's current account will be debited and then credited with the concerned partner's capital account. In the same way, for adjustment of the surplus, the concerned partner's capital account is debited and bank account of the concerned partner's current account will be credited. So, to put in simple way, there are two different types of problems under adjustment of capital. Okay, adjustment of capital. In this, we have two types. One, adjusting through cash or bank account. The other one is adjusting through partner's current account. So the main concept of this adjustment of capital is either the partner might have to bring some additional capital if there is a shortage, or if there is a surplus, he will take away the surplus value. So here again we can divide into two. Okay, shortage in capital, and here we can say surplus in capital. So what is the corrective action? If there is a shortage in the capital, okay, bring further capital. Okay, you have to bring further capital. For this surplus in the capital, okay, you have to withdraw. Okay, withdraw the excess amount of capital. Okay, you have to withdraw the excess amount of capital. So what is a journal? For bringing further capital, the journal is as follows. Cash or bank account is debited to whichever partner has to bring the amount of capital, that particular partner's capital account. Okay, so two partners capital account. Okay, that's what they mentioned here. Two concerned partners capital account. That's what we are mentioning here as two partners capital account. If suppose you have surplus, okay, you have to withdraw, then you will follow this particular journal. Okay, the journal under this case is reversal of this entry. That is partners capital account debited. Partners capital account is debited to cash or bank account. Okay, to cash or bank account. Okay, so this is the journal which we have to follow. Cash or bank account is debited to partner's capital account in case you have to bring the amount of capital, or in the other hand, partner's capital account debited to cash or bank account. So this is how we'll follow in the case when you're adjusting through cash or bank account. Any doubt in this concept? Okay. Now, if it is going to be adjusted through the partner's capital account, here also you have got two alternatives. One is shortage in your shortage in capital. If there is a shortage in the capital, then you have to bring further capital. Okay, that is a treatment. Bring further capital. For this, the journal entry will be the journal is whichever partner has to bring the amount, that particular partner's current account will be debited. So in the previous case it was cash or bank account debited, but here it is concerned partners current account. For example, among A, B and C, three partners, if partner B only has to bring further capital, then B's current account will be debited. Okay, so that's what we mentioned here as concerned partners capital account is current account is debited. Okay, I'm sorry. Concerned partners current account debited. ஒன்றும் இல்லைம்மா, சப்போஸ் இப்போ கரண்ட் அக்கௌண்ட் மூலியமாக நம்ம ரூட் அப் பண்ண சொல்லியிருந்தாங்கன்னா கொஸ்டினில் நம்ம வந்து கன்சர்ன் பார்ட்னர்ஸ் கரண்ட் அக்கௌண்ட் டெபிட் பண்ணுவோம். அதுவே கேஷ் மூலியமா பண்ணும்போது என்ன பண்ணீங்க, கேஷ் ஆர் பேங்க் அக்கௌண்ட்டை நீங்கள் டெபிட் பண்ணீங்க, கரெக்டா? when you are going to just the capitalங்கிற போது அப்ப என்ன பண்ணுங்க, கேஷ் ஆர் பேங்க் அக்கௌண்ட் டெபிட் பண்ணீங்க. ஆனா இப்போ அதே கரண்ட் அக்கௌண்ட் மூலம் ரூட் பண்ணும்போது you are going to okay adjust through the partners current account. So concerned partners current account is debited to concerned partners capital account, to concerned partners capital account. So in the place of cash or bank, you are going to bring current account. Or the மற்றபடி other things remains the same. Look here. இங்க வந்து to partners capital account போட்டிருந்தா இங்க concerned partners capital account சொல்லி மென்ஷன் பண்ணிருக்கோம். மற்றபடி வேற எதுவும் சேஞ்ச் கிடையாது. Clear? Okay. Now the second case is when you have surplus. Okay. So surplus in capital. Surplus in capital. In this case, you will withdraw. Okay. Withdraw the excess amount in capital. You will withdraw the excess amount in the capital. So அப்போ இதுக்கு என்ன சார் ஜேர்னல், அப்படியே மேல இருக்கிற என்ட்ரியை ரிவர்ஸ். ஸோ கன்சர்ன் பார்ட்னர்ஸ் கேபிட்டல் அக்கௌண்ட் இஸ் டெபிட்டட். ஓகே, கன்சர்ன் பார்ட்னர்ஸ் கேபிட்டல் அக்கௌண்ட் இஸ் டெபிட்டட் டு, நம்ம அந்த கேஷ் ஆர் பேங்க் அக்கௌண்ட் கேஸை பார்த்தோம்னாக்கா என்ன பண்ணோம்னாக்கா பார்ட்னர்ஸ் கேபிட்டல் அக்கௌண்ட் டெபிட் டு கேஷ் ஆர் பேங்க்னு போட்டோம். இங்க கேஷ் ஆர் பேங்க் போட முடியாது, அதுக்கு பதிலா கன்சர்ன் பார்ட்னர்ஸ் கரண்ட் அக்கௌண்ட். ஓகே, கன்சர்ன் பார்ட்னர்ஸ் current account. Any doubt in the journal entry? Okay, now we are going to work out a problem under this category, that is adjusting through partners current account. Okay, let us discuss the problem. Come to this particular problem, illustration number, just a minute, 20. Okay, the question itself says very clearly, okay, there are four partners. S, T, U, and V were partners in a firm sharing the profits in the ratio 4:3:2:1. So we have got four partners: S, T, U, V. Their profit sharing ratio, that means old PSR, okay, is given as the old PSR, which is given for us is 4 is to 3 is to 2 is to 1. That means 4 plus 3 is 7 plus 2 9 plus 1 10. So 4 by 10, 3 by 10, 2 by 10, and 1 by 10. It was mentioned that on 1st of April 2016, their balance sheet was as follows. So we have been given a balance sheet. Okay, 1st April 2016. So beginning of the year. Okay, it is given balance sheet of S, T, U, and V. Okay. Always remember, whenever you're going to consider any balance sheet, first give importance to these six items out of seven items. Okay, so in balance sheet, there are totally six important items out of seven items. That means on the assets and the liability side of the balance sheet. On the liability side, okay, in the liability side, you have got four items, and on the asset side, okay, you have got three items. So altogether seven. What are those items? If you ask, on the liability side, okay, the first item can be your general reserve. Okay, general reserve. The second item is your WCR. The third item is your IFR. And the fourth item is profit and loss account. This is nothing but your accumulated profits, which we can otherwise call it as undistributed profits, or we name this as retained earnings. These are the words which we call this particular item as. Okay, retained earnings. Okay, what are the items that can be found in the asset side if you ask? The first item will be goodwill. The second item is advertisement suspense. This is nothing but your deferred revenue expense. Deferred revenue expenses. And the third item is profit and loss account. This is denoting your undistributed loss. Profit and loss. Okay, when it appears in the asset side of the balance sheet, it denotes the undistributed loss. Now, this item alone, I have used two different colors. For liability side, I used white color, and over here, yellow color. The reason is this one item might appear either on the asset side or on the liability side, because we will get either profit as a result, if not loss as a result. We won't have both at the same time in the balance sheet. So either you may have profit or you may have loss. So that's why I said six out of seven items. Okay, so you have to first check out in the balance sheet whether any of these items are available in the given balance sheet. So first check out your balance sheet. So in the balance sheet, if you see on the asset side, I have fixed assets and current assets. So that means I don't have any three out of those items. Okay, let's check out our liability side. You have got capital value of the partners. You have got sundry creditors. Yes, you have got something about the workman compensation reserve. WCR is available. So when WCR is available, you have to bring it to your mind. You have to recapitulate the concept of WCR, whatever you learned it. Check out what is the reserve value that you have maintaining it. 60,000. You have to see in the additional information what is given with respect to WCR. So in WCR against the claim ஏதாவது இருக்கான்னு பாருங்க. இருக்கா? The claim for workman compensation is estimated at rupees 70. அப்ப நம்ம வச்சிருக்க claim எவ்வளவு? இந்த ரிசர்வ் எவ்வளவு? 60. வந்திருக்க claim எவ்வளவு? 70. அப்போ இந்த கேஸ் என்னது? ரிசர்வ் இஸ் லெஸ், claim is more. கரெக்டா? ஹலோ? அப்ப இந்த கேஸ்ல நம்ம என்ன பண்ணணும்? We have to remember that we have to open revaluation account. Okay. In this case, we have to remember that we have to open the revaluation account. Through revaluation only, we need to pass the entries. Okay, there is a necessity for revaluation account. Okay. Now the question further it talks. From the above date, partners have decided to share the future profits in the ratio 3:1:4. So NPSR is also given to us. Okay. In the question, we have also been given the NPSR. Okay. So NPSR is 3:1:4. Okay. 3:1:4 for S T U V. So 3 plus 1, 4, 4 plus 2 is 6 plus 4, 10. So 3 by 10, 1 by 10, 2 by 10, 4 by 10. Always remember when you have these two information, that means old PSR and your NPSR, please work out and find out the sacrificing ratio, gaining ratio, that is who's sacrificing partner, who's a gaining partner. Work out that particular workings, which will be fetching you some marks. So use the mnemonic which we gave you, song. So using this, you find out the sacrifice or gain. So the formula will be as sacrificing ratio is equal to the old ratio minus new ratio. Old ratio minus new ratio. Now let's calculate for each and every partner. So it is S, T, U and V. One by one, let us calculate. For S, what was the old ratio? The old ratio was 4 by 10. Now it is 3 by 10. So 4 by 10 minus 3 by 10. This gives 1 by 10. Positive figure. So that means he is sacrificing. Okay. Yes, got over. T. What is the value of T? 3 by 10 and 1 by 10. So 3 by 10 minus 1 by 10. This gives me 2 by 10, which is a positive figure. So it's a sacrifice. Are you able to understand the concepts as of now? Okay. Now moving on to the partner U. Okay. So for partner U, the old one was 2 by 10 and the new one is also 2 by 10. Okay, so old one was 2 by 10 and the new one is also 2 by 10. That means it is nil. Neither he is sacrificing nor he is gaining. Now for the partner V. So for the partner V, old one was 1 by 10, new one was 4 by 10. So 1 by 10 minus 4 by 10. This gives minus 3 by 10. So partner V is gaining. Okay, we have calculated this for one reason. Let me say what that reason is all about. Come back to the question. Okay, it is mentioned in the question very clearly that for this purpose, that means for the change in the PSR, goodwill of the firm was valued at rupees 90,000. Okay, remember what is this? We have got some goodwill adjustment. Okay, there is something mentioned in the question that goodwill of the firm was valued at rupees 90,000. This is an information, that is, this is actually available in additional information. Okay, this is an additional information given the problem. When any goodwill is appearing in additional information, okay, so goodwill appearing in additional information, it is denoting what? Self generated. Okay, it is denoting self generated goodwill. Now, what is the accounting treatment for the self generated goodwill? Okay, for self generated goodwill, the accounting treatment is you have to pass a journal entry. Okay, pass a journal entry. What is that entry if you ask? The entry is quite simple. Gaining partner, okay, gaining partners capital or current account is debited. Gaining partners capital or current account is debited to sacrificing partners capital or current account. This is the normal basic journal. Now in this problem, if you see who has gained, who's a gaining partner, we have calculated the gaining partner was V. So with this, you have to pass a journal. So V's capital account, okay, the journal will be as V's capital account is debited, okay, to sacrificing partners. So who are the sacrificing partners? If you see, they are S and T. So S and T are sacrificing partners. Okay, S and T. So now we have passed the journal. Now what we should do is, what was the gaining ratio given for the partner V? V or the gaining ratio எவ்வளோ சொல்லியிருக்கோம்? 3/10 சொல்லியிருக்கோம். Right? Now, what was the value of firm's goodwill given the question? What was the firm's goodwill value given the question? 90,000 rupees, right? That was the amount given the question, right? The firm's goodwill was valued at rupees 90,000. So what you should do is, firm's goodwill, okay, firm's goodwill is equal to rupees 90,000. In this 90,000, calculate what is the gaining partner share. Okay, in this, okay, 90,000, you calculate gaining partners share of goodwill. Okay, you are going to do that is a step. Calculate the gaining partner share of goodwill. Okay, by applying the gaining ratio. So that means 90,000 into 3 by 10. 1010 gone. So this gives you an amount of rupees 27,000. So that means partner V, okay, have to make this amount of 27,000, okay, payable to those sacrificing partners. Okay, now how he is going to distribute this 27,000? Okay, that means this 27,000 should be divided among those two sacrificing partners who have named as S and T. So he should distribute to S and T. So how he is going to distribute? 27,000 into what is the sacrificing ratio for yes it is 1 by 10, okay, into 1 by 10, okay, and over here it is going to be as into what value? I'm sorry, just a minute. Okay, the goodwill you are derived as 27,000, right? I'm explaining something. The value of goodwill you are derived as 27,000. Now that is the value of whom? The value of partner who's getting a benefit. Now calculate the sacrificing partner's goodwill also on the firm's goodwill. I made a mistake, sorry. Calculate the sacrificing partner's goodwill also on that 90,000 itself. It is not this 27,000 to be distributed. I'm sorry. Okay. I thought this as a goodwill appearing inside the balance sheet. I'm extremely sorry. So for V, you are calculated on the firm's goodwill 90,000. You got this value. In the same way, for the other two partners, S and T, you calculate on the 90,000. Okay, into 1 by 10, 90,000 into 2 by 10. That is in the sacrificing ratio. Once if you cancel the common zeros, you'll get the amount. For yes, it is 9,000 rupees, and for T, it is rupees 18,000 rupees. Now, this is the amount you are going to split in this value. That is, gaining partner's capital account is debited. Okay, that is V's capital account is debited 27,000 to S capital account 9,000, and over here 18,000. Up to this, if you have any doubt, please let me know before we go for the next calculation. Any doubt? Hello, Manav. Any doubt up to the stage? Okay. Now you are just checking up the next one calculation, which was given as the claim against the WCR. So you have 60,000, but the claim comes to 70,000. So for that, you have to pass the journal. So what is the journal that you have to pass? You have to pass two journal. One, okay, the amount of WCR account will be debited, then revaluation account, okay, revaluation account is also debited too, okay. So you're debiting these two accounts, WCR account debit, revaluation account debit, to workman compensation claim account. What account? Workman compensation claim account. So we had 60 in the reserve. The claim has come for 70,000. The difference 10,000 will go to the revaluation account. This is the first journal. Followed by this revaluation amount, whatever you have, should be distributed to the partner's capital account. So S T U V. Okay, all these capitals is going to get the debit balance. So S's capital account is debited. T's capital account is debited. U's capital account is debited. V's capital account, okay, is debited to revaluation account. Okay, to revaluation account. Now in the revaluation account you have 10,000, so record 10,000 over here. Now this 10,000 what you have should be distributed among those four partners, okay, that is namely S, T, U and V. Between S, T, U, and V in their old profit sharing ratio. So what is the old profit sharing ratio? 4, 3, 2, 1. Okay. So that means 4 by 10, 3 by 10, 2 by 10, 1 by 10. So 10, 101. So 4,000, 3,000, 2,000, and 1,000. Okay. So the amount will be distributed as, okay, 4,000, okay, 3,000, 2,000, and 1,000. Any doubt up to this? Okay. The question further goes and says very clearly that to adjust the capitals. So that means the concept, what concept it is mentioned very clearly. Adjust the capitals. Okay, to adjust the capitals, partners, okay, to adjust the capitals of the partners according to new profit sharing ratio by opening partners' current accounts. So they themselves have said it is a concept of adjustment of capital by opening partners' current account. The question asks us to prepare revaluation account, partners' capital account, and balance sheet. Okay. Now we have learned that revaluation is nothing but revising the values of assets and liabilities. Okay. We have learned in such a way that it is a revaluation of assets and reassessment of liabilities. Okay, and reassessment of liabilities. This is a concept which we learn. But when we look into this problem, we neither had any of the asset value getting increased or nor any of the liability value getting decreased. And on the other hand, none of our asset value have decreased. Similarly, none of the liability value have decreased, and at the same time, there was no other assets which have been left as unrecorded assets to be recorded now, and there was no other liability which was left all alone, like none of the liabilities has been recorded now to be recorded. So, in this category, we didn't find any items appearing in the adjustment. At the same time, we didn't have anything to be recorded as revaluation expenses also. Revaluation expenseங்கிற பேர்லயும் எதுவும் நமக்கு question இல்லை. Then, how to open the revaluation account? That's very simple. There was one adjustment with respect to your WCR. There you have got revaluation. So since you have revaluation account appearing in your journal, you have to open revaluation ledger. So open this revaluation account. It is completely a ledger account. So debit side and credit side. So first you see what happened here. Revaluation has been debited. So take the account from the credit. So to WCC, workman compensation claim. So record it over here. Okay. To workman compensation claim account. What is the amount that is appearing against revaluation? Revaluation against என்ன amount இருக்குன்னு பாருங்க. அந்த அமௌண்ட் தான் நம்ம எடுக்கணும். ஓகே, அக்கவுண்ட் மட்டும் நம்ம ஆப்போசிட் சைட்ல எடுப்போம். ஆனா அமௌண்ட் இஸ் the one which is pertaining to revaluation. So amount you have not supposed to take 70. Amount which you have to take is 10,000. Am I making sense to you? Can you able to understand? Can you able to understand, ma'am? Okay. The next is again you have one more entry where you have got revaluation appearing in the credit. So whatever the items appearing on the debit will be taken to the credit side of revaluation account. So it will be mentioned as by revaluation loss, you'll mention the amount as 10,000, but below this you'll write one below the other. Okay, like A's capital account, B's capital account, C's capital account, D's capital account. So amount will be as 4, 3, 2, 1. So now you will close your ledger balance with rupees 10,000 on both the sides. Up to this revaluation account, if you have any doubt, let me know. The same is what they have worked out here. Any doubt up to this revaluation account? Any doubt up to this revaluation account? Okay. Now finally, we have to prepare two accounts. One is partners capital account and balance sheet. Okay. So let us prepare the partners capital account over here. Okay. Partners capital account, debit side. Okay. Particulars followed by that the partner's name S T U V, all debit side balances. The same will be over here also. Particulars S T U V, and we have a credit side. Now you have to understand one basic concept that partners capital account, the old balance will take it from the old balance sheet. Okay, where it is mentioned that for S, T, U, and V, the amount is 2 lakh, 1 lakh 50, 1 lakh, and 50,000. So all these amounts are appearing on the liability side, which means it shows a positive value. So that means favorable value. So 2 lakh, 1.5 lakh, 1 lakh, and 1.5 lakh. So what you should do is you will bring the amount on the credit side, mentioning it as by balance brought down 2 lakh, 1 lakh 50, 1 lakh, and finally 50. Any difficulty in bringing the first value? How to bring the value? Any doubt? Any doubt, Kana? No, right? Okay. Now we had some of the areas where partners capital account are involved and revaluation account is also involved. So we have to bring all those into the partners capital account. So look at here. You have partners capital account where the partners capital is being debited and two revaluation account. So in partners capital account, you will be recording over here two revaluation. So value of rupees 4, 3, 2, and 1. 4, 3, 2, 1. So I have brought this into the picture. Now the same way we have something like the amount of profits, so the amount of goodwill which has been brought in and it was distributed. So where we had a journal for that, right? For that journal also you have to pass on to the partner's capital account. So just mention as V's capital account debited to S capital account to T's capital account. So I should bring S capital and T's capital in the capital account on the debit side. Okay, so S capital and T's capital. Okay, to S capital to T's capital. So look here, from where the amount is getting debited, the amount is getting debited from whose capital? From V's capital. So in V you have to record these two values 9 and 18. Okay. So in V you are going to record the amount of 9,000 and 18,000. And the next, quite opposite of that, over here you'd record by V's capital account. Now the amount should be appearing in S and T. Okay, the amount should appear in S and T. So 9,000 and 18,000. Nothing over here. So as of now on the credit side two items and on the debit side, okay, I've got one item. If you look here, they would have also brought you by balance brought down the amount of the partners given the question, and then on the credit side by V's capital account, which even we have also shown it here, V's capital account. Can you able to see this? By V's capital account. Okay, so this and this we have brought it, okay, from the given information. Okay, now come back to your debit side. Only one item we have recorded here, that is revaluation loss. Okay, this revaluation is nothing but this referring to loss. So here to revaluation account, the value you have mentioned 4321. Okay, here also we have mentioned the values as 4321, and followed by that it is mentioned as S capital and T's capital 9,000 and 18,000. Even here 9,000 and 18,000. These values we have recorded. Any doubt in understanding these values, let me know how I brought it, from where I brought it. I'll tell you. If you're clear, then we'll move on to next step. Any doubt up to this? Okay. Now, apart from this, I don't have anything to bring in. All the adjustments I've taken action. Now I'll total the values separately. Okay. Now I should total the values separately. So what I'm going to do is for S T U V. Let me find how much is available in that balance. Okay. So let's see, like debit side total is heavier or credit side is heavier for them. By looking at this situation, I think we can say easily. Okay, for yes, what is the situation? For yes, if you see 2 lakh and 9,000, 2 lakh 9,000, here only 4,000. So first, let's take credit value. From that, we'll debit the values. So rupees 2 lakh 9,000, and from this, if I subtract 4,000, how much is available? Excess, that is credit balance is how much? Rupees 2 lakh 5,000. Am I right? Okay. Similarly, calculate for the partner T. 1 lakh 50 plus 18. That means in the credit you will be having an amount of rupees 1 lakh 68,000. Okay, you'll have 1 lakh 68,000. How much you have in the debit? The difference is 1 lakh 65,000. Similarly, come to you. In the case of you, you have got an amount of rupees 1 lakh on the credit. On the debit, you have got only 2,000 rupees. The difference is going to be as rupees 98,000. Come to V. For V, it is showing 50,000 rupees. And over here, if you see, it is 18,000 plus 1,000, 19,000, 19,000 plus 9,000. How much will be as? 27,000? Sorry, 28,000. Is it 28,000? 28,000. Very good. So you will be having 20,000. So now if you see, all these are the remaining balance in the capital. Now add all these value. This value plus this value plus this value plus this value. If you total these four values, tell me how much you get. Total those four values and tell me how much you're getting it. Okay. That is an amount of rupees 2,05,000. How much you're getting? 4 lakh 90? 90, yeah? Okay. So an amount of rupees 4 lakh 90 you're getting it. This is nothing but total capital of new firm. Okay, this is nothing but total capital of the new firm. So now you should understand we have to derive the value of each partner, how much they should have. So let's have in such a way share, okay, and capital. If the entire share is 1, that means the base is 10 means so 10 out of 10 is 1. If the base is 5, 5 out of 5 is 1. Let the entire share in the firm be 1. If that is the case, the total capital is 4 lakh 90,000. Now let's calculate for each and every partner. That is for yes. Okay, what is the new share of yes? As per the question, what is the new share of yes? 3 by 10, correct? For 3 by 10, how much? Okay, if 3 by 10 is your share, how much you should have the capital? Cross multiply. So 4 lakh 90,000 into 3 by 10 divided by this 1. This 1 will go to the numerator as multiplication, which will be as 4 lakh 90,000 into 3 by 10 into 1. Okay, now cancel out the common 0 over here and over here. When you multiply this value 49,000 with 3, how much you'll get? 300, 300, 300, 9 threes are 27, 2 carry over, 4 threes are 12, 13, 14. Are you getting 1,47,000? Okay, this is for yes. Okay, this is the value of yes. But how much yes has got? That you should check it up. Okay, yes has got this much. This is the available balance. Okay, available balance of yes. Now we are finding the required balance of yes. The required amount is 1,47,000. Okay, so for yes, the required is only 1,47,000. Now you compare and tell me, will yes have to bring further capital or yes will take away the excess capital if any? Is there any excess in yes capital or is there is a shortage in yes capital? Is there any shortage or is there any surplus in this case? Available is 2 lakh 5, but required is only 1,47,000. Compare these two and tell me. Excellent. So what you should do? You have to find out the difference. So tell me what is the difference between these two value? 1,47,000 and 2,05,000. Yeah. Okay. Very good. So 58,000 rupees, okay, is there as excess. So this 58,000 rupees, which is excess, he will take away. Okay, he will take away. That means withdraw. Okay, partner yes will withdraw 58,000 rupees. Now in the same way, let's come to partner T. For T, what is the new profit sharing ratio given in the question? Just check it up the question and tell me. It is 1 by 10. Now again, okay, when you're going to calculate for T also in the same way, like how you did for S. Okay, for T it is now 1 by 10. So for entire share, 1 4 lakh 90 is a capital. For 1 by 10 share, how much is going to be the capital? So 4 lakh 90 into, okay, 1 by 10 divided by 1, multiply it, okay, and do the reciprocal necessary. So again, it will be as 1 by 10. When you cancel the common zeros, you will be getting an amount of rupees. How much? Required amount of rupees 49,000. Correct? The required amount is 49,000. Now come back to partner T. This is available. Okay. This amount is available. But the required is 49,000. Now you compare and tell me, is there a shortage or is there a surplus? Is there a shortage or surplus? Okay. Yes. What is required? So what is that excess money? Calculate the value, how much you have excess. 1 lakh 16,000 rupees. Okay. So this amount will also be taken away. Okay, so it will be taken as withdrawn. Okay, so partner S will also withdraw, partner T will also withdraw. Okay, now coming to the next partner, that is partner U. Okay, so let's see what will happen for partner U. Okay, same way. What is U's share of profit? That you check it up in the question. 2 by 10. Okay, so for the entire share of 1 4 lakh 90, okay, if it is a 2 by 10 for you, then how much he has to bring in? So 4 lakh 90,000 into, okay, 2 by 10 divided by 1. So that means into 2 by 10 into 1. So the amount will be as how much? 200, 200, 200, 9 twos are 18, 1, 4 twos are 8 plus 1, 9. So 98,000 is required. Okay. Now in this case, if you see the available for use 98, required is also coming to 98. Now tell me what will be your action. Will he have to bring some amount or no need to bring any amount? What will be the reason? Available is 90. Yes, very good. Okay, not required to bring any amount. Okay, not required to bring any amount. Coming to last partner, V. Okay, so for V, we have 22. This is available. Okay, what is the new profit sharing ratio given in the question? 4 by 10. Okay, so same way for, okay, V. If it is a 4 by 10, how much is required? So this becomes 4 by 10, and here it will be multiplied with 4 by 10. So this amount 49,000 should be multiplied with 4. So calculate and tell me what amount you get. 400, 400, 400. 9 fours are 36, 3. 4 fours are 16, 17, 18, 19. So required amount is 1 lakh 96. Okay, 1 lakh 96 required for V. Now tell me, is the available amount is sufficient or it's insufficient? So that means in this case you have shortage. What is the amount of the shortage? What is the shortage amount? Calculate. Rupees 1 lakh 74. That means partner V should bring capital. Okay, out of four-person, one person need not bring any capital or will not be able to take up any capital. So the remaining three partners are available. Out of the three, one partner has to bring in the capital. The other two can withdraw the capital. But remember, here it was mentioned very clearly in the question beginning itself. The partners have decided to adjust. Okay, this is the one which we have to be very careful. Partners have decided, okay, to adjust the amount by opening, okay, partners current account. So here we are going to give importance to current account. Whether you're introducing or you're going to withdraw, partners current account will come into the picture. So now let us go ahead with the journal. Okay, what needs to be done? Okay, so the journal is when you are going to introduce, okay, when we are going to introduce the amount of capital. Okay, just a minute. Yeah, here you see when there is a shortage, what was the journal? Concerned partners current account is debited to concerned partners capital account. So here the shortage is for whom? For partner V, right? So the entry will be as V's current account is debited to V's capital account. So in the capital account, you will find on the credit side by V's current account. If you see this partner's capital account, you can see here, okay, by V's current account. Irka, by V's current account. 1,74,000 V irka. V irka ma. Hello. Okay. In the same way, okay, when you look into this case, that is where you have the surplus. Okay, so concerned partners capital or current account is debited to concerned partners current account. Okay, so here if you see S and T. Okay, so S and T's capital account will be okay debited. Which account is credited to S and two T's. Okay, current account. Okay, current account is credited. So what we'll do in the capital account, you will bring to S current account to T's current account. Okay, so to S and T's current account will be appearing over there. Just look into it. If you see, it is mentioned as to S current account to T's current account. So 58,000 because we found how much is going to withdraw. We have found here this amount you have to take away. Correct? The amount to be taken away we have learned is or we are seeing is 58,000. So that's why they are passing it for 58,000 for partner S and for partner T for 1,16,000 you have to pass the value. Okay, so that's the reason here we see to S capital account 58,000 and to T's current account rupees 1,16,000. Any doubt up to the stage? Okay, once you're done with this, you will have to close the account. So you'll mention here as to balance carry down. And here we have already found out how much is the required balance in each of the partners cases. So in case of yes, it is 1,47,000. That will be the closing balance 1,47,000. In case of T, we found the required value as 49,000. So 49,000 was recorded. in T's account as a closing balance. In case of, okay, you, okay, in case of you, the required is 98,000. So 98,000 you will record it in the used account. And in the place of V, the required balance we found is rupees 1,96,000. So you will also record it here as rupees 1,96,000. So once you're done with this, you'll close the partner's capital account on the both the sides with the same total. Able to understand the partner's capital account? Right. Now finally we are going to complete the balance sheet. So balance sheet, as it is mentioned here, okay, the old balance sheet, the asset side two items, fixed asset account 4 lakh 40 and current asset 2 lakh will appear as such. So you can see here fixed asset account, okay, and current asset account is appearing 4 lakh 40 and 2 lakhs, okay, and this particular one V's current account will appear in the balance sheet with the value of rupees 1 lakh 74. The reason is his amount will be deducted from the current account, so thereby the amount is coming into the picture on the asset side for the value of rupees 1 lakh 74. So do not forget to bring V's current account because he is bringing an amount of rupees 1 lakh 74,000. Then on the liability side, whatever is mentioned, capital, sundry, creditors, these two you are going to first show it. So for capital, S, T, U and V, this value 1,47,000, 49,000, 98,000 and 1,96,000, which means automatically from here, sorry, not from here, this balances is getting floated, okay, to this particular account, and thereby the total comes to rupees 4 lakh 90. Then the sundry creditors given in your old balance sheet as 80,000, the same 80,000 is going to appear even right now. Any doubt up to this case, up to this stage? Okay. The next is here the withdrawal has also happened by the partner. So you have to mention yes current account and T's current account. Whatever the withdrawal that they have done, the amount of withdrawal will also be shown in the picture. And we had one particular reserve, okay, that is WCR, but the reserve has been utilized to meet the claim. So now reserve is not available with us. We don't have reserve right now, but this reserve is used to meet a liability. Okay, so what is the actual liability? If you see here the 60, that the claim comes to 70. So you have to show provision for workman compensation claim. The claim amount you have to bring in because claim is a liability. So the amount of claim was 70,000, that you are showing it here. Once it is done, both the sides will show the total of rupees 8 lakh 14,000 as your balance sheet total. So this is how you will be preparing the partner's capital account and the balance sheet of the new firm when the partners have undergone some changes in the profit sharing ratio, for which they have decided that either if required they may bring in the amount of capital, or if not required they will withdraw the excess. So that means adjustment in their capital. So in that case, this is how you'll prepare the balance sheet and you'll close it up. I hope the problem I made it clear to you right from the scratch. Okay, inch by inch and each and everything. I think it has been clearly explained to you. If you have any doubts or queries, let me know. If you don't have any doubts or queries, then we can close the chapter and we'll continue with a new chapter in the next session. The new chapter which I'm going to handle will be from the financial statement analysis textbook, comparative and common size statement. I'm just putting a hold over here. I'll complete that chapter in a week, and then again from next week you'll start the admission of a partner. So now in change in PSI, if you have any doubt with respect to any topic or any concept, you can approach me at any point of time. Okay. So let this will close today's class. Thank you, Kana. Welcome.